What is your rating? What is your expectation for the quarter, especially with Target's sales mix being considerably more discretionary than its rival of Walmart?
That's exactly right. Right now, we rate the company a sector weight. We did downgrade the stock back in June. And our near-term concerns really are around some of the pressure on the discretionary side of the business that we're seeing. We think some of their categories like home and apparel may be down low double digits when they report this morning. We know that in 2Q, there were some acute problems also from customers boycotting the brand. And then, of course, unfortunately, shrink theft in stores has been an issue, and we think may have gotten worse here. So as we think about the near-term setup, I actually think a lot of that negativity is very baked in. Stock's been a big underperformer over the last 2 or 3 months. And so it wouldn't surprise me if you got an element of a relief rally here today as they clear the deck and talk about some of these challenges. What keeps us on the sidelines as we look out to the back half of the year are continued challenges in some of these areas, but also the incremental headwind that we're expecting from student loans that we think could hit Target more than other retailers.
You know, I want to talk to you about student loans in just a minute, but I want to get to you about talk to you about something else that you tell me, big deal, small deal. So last quarter, Target saw a slight decline in the percentage of sales originating online. So from just over 18% down to 17.5%. That meaningful? Because the understanding in retail is the idea is that you want to push more and more to omni-channel selling.
That's exactly right. That's another area of disappointment for investors. Target was a big beneficiary during the pandemic, not only of growth in stores, but of online, and hasn't really been able to drive incremental e-commerce growth over the last few quarters. This in comparison to Walmart, that's really hitting stride on investments in advertising and fulfillment and marketplace that have been driving e-commerce growth in the 20% range over there. So, you know, we'd really like to see that going in the right direction at Target before getting more positive.
All right, so you touched on student loans. I want to get to it. I look online, I see the estimates between $200 a month on average up to $500 on average of a student loan payment. How big of a deal is this for Target with that consumer discretionary sales mix being so high?
It's a great question. Well, I think first and foremost, it's important to remember that it's really hard for us to tell how big of an impact this is going to be on retail. When student loans were paused, there were so many other changes happening to the consumer that it's impossible to go back and measure who got the best benefits from this. And as we look forward, of course, the Biden administration is doing everything in their power to delay the need for borrowers to make their payments.
But a hit to the top line is what you're saying, basically?
Exactly. But as it stands here today, you know, our math is that there are 25 million Americans that are in forbearance that should be coming out of forbearance. And when we look at our KeyBank credit card data and payment data, you know, the average payment had been about $400 a month. That'd be a big headwind, potentially $10 billion a month if everybody ends up paying.